Good evening. This is Ken Long at Tortoise Capital with a review of the weekend trading reports for June 30th, 2018. Market has dropped into sideways normal conditions. It normally doesn't stay there very long. It resolves one way or the other, up or down. On an annual basis, looking at NDX 260, the market is in neutral condition. On a 10-day basis with the 10-day NDX, we're also at the lower end of neutral at 34. Looking at the market mosaic, price with respect to the 200-day moving average is red sideways at 1.73% above the 200. The slope of the 50 has turned red neutral at 0.08. The ADX is a neutral trending 21.8. The risk index is the 30-period moving average of the VIX divided by the 10-period. 1.0 is the boundary between risk on and risk off. Current reading is at 0.895, so we are in risk off conditions. Take that score and look back the last 5,000 trading days, and we can compute the risk Z by finding the average and the standard deviation of the look back period. The current reading is at minus 1.27, and this is as 90-day histogram of that indicator. You can see that we've just entered the winter season, if you will, which is the downward sloping, increasingly red below the zero line. This favors shorter term trading, ready to be exploiting intraday weakness. This is not a time to be starting new swing positions with the market in a critical state. These are the holdings for the blended monthly rebalancing. This is what we'll be holding for July. Next reevaluation is due on or about 1 August. In the ETF2, the theoretical exposure is at 40%. There's a quick look at some of those blended monthly rebalancing portfolios. See the ETF 13 about evenly split between buying and cash. ETF 32 also about evenly split, again with US dominating over the globals, but some weakness starting to creep into the US as well. In the Dow 30, mostly sell off this whole week. GE had an interesting 1 week performance, as did Nike. Sector spiders, again, mostly sell off this week. Only a few long-term positives in the area of energy and healthcare. This is the market health check. The vertical blue lines are 10, 20, 30, 40, 50 days of look back. Horizontal red lines have been support levels that actually act as price targets on the way down. So when support breaks, you go to the next red line. We have pulled back from a 10-day high, has pulled back through one support level in the yellow, which was this support level from the dragon that broke. And now we have this wider area of support. If this breaks, then we will be well below the 200, and the next stop would be down here this far. You can see the 10-period regression channel has rolled over. The 30-period regression channel is basically flat. In the MACD histogram, we just went negative, so we actually have a negative bias on the market at this point. And that's why, to me, the support level with the next two bellies of the dragon are both well in play. In ETF2, only the U.S. is above its 4-month moving average, so this puts us at 40% invested, 60% cash in the asset allocation model. Among the sector spiders, energy, technology, and discretionary are looking favorable. Still, the U.S. is leading the way with small caps dominating. Broad weakness across the board in both Europe and Asia. These are the top ETFs in the ETF2 database, about 500 of the most liquid ETFs. It's been energy. Consumer discretionary is very interesting, XLY. And then technology. Shifting to the daily report. Small caps fired on both channeling and overreactions. You can see the 10-day max pain candidates here. Um, a half a dozen real quality signals for the auto framer and max pain and dojis. That would be, Intel, Caterpillar, Boeing, McDonald's, United Health, and Travelers. Nike's outrageous bounce on Friday. And then the ETF 30s again, almost a dozen quality auto framer signals. Breakouts here in oil to the upside. Daily pension stretch report. Only Pfizer is on a super pinch for the dailies. The auto framer, plenty to choose from here with mechanical trade framing, aiming for 1 day payoffs if they get a nice bump. Um, Regression line fractal frameworks, the usual suspects, and the daily squeezes. That's everything I want to cover for this weekend. We're enjoying a blessed moment with Van and Carla Tharp and the marriage of their niece Nanthony, who we wish all the best to as she heads into a bright future with her new husband. This is Ken at Tortoise Capital. Keep your risk measured and your powder dry.